folks, and welcome back to NTI's Japan Real Estate Podcast. I'm your host, Ziv Nakajima again, and this podcast was brought to you, among others, by Emil Gorgis, a Tokyo real estate agent who specializes in serving international or mixed nationality families looking for the perfect family home. So Emil's an Australian. He's been living here in Japan for the past 2 decades, 8 years of which he's been actively buying, selling, and managing real estate properties in the city on behalf of his own family and a great many happy clients. And he also acts as a mortgage broker on behalf of his clients. So his company has a dedicated loan officer in many of the Japanese mega banks. And if you're a regular listener, you probably already know him from our JREP, the Japan Real Estate Experts panel sessions. So you're probably already aware that the man is an absolute fountain of wisdom on all things related to real estate in Japan, and in particular to family homes, the greater Tokyo metropolitan area, and mortgages. And most importantly, he's incredibly generous with his time and advice, which he's more than happy to provide at no cost or commitment to anyone asking. So if you've been thinking about buying your home in Tokyo, but you've been sitting on the fence for a while, or if you just want to have a chat in English with a real expert, drop him a line on emil.gorgis, that's emil.gorges, emil.gorgis at tokyorealty.jp. Hit him up today and start exploring your options. All right, so for today's episode, we're back with our JREP Experts panel once again, starting off light and easy off topic, talking about cherry blossoms and horror movies of all things. But we quickly get back on form with a conversation about the advantages and disadvantages of purchasing in cash versus a financed purchase, and how to accurately calculate profitability and returns in both cases. We also talk special purpose loans, like for Airbnb properties, for example. Then a bit of a segue, or a rant, I should say, on the subject of Japan's archaic banking system, how easy it is or how difficult it is to open corporate bank accounts in Japan, how to apply for a loan as a business owner, online banks as opposed to retail banks, the lack of an escrow system in Japan, and also some other topics like price appreciation, depreciation and how that's calculated, purchase and running costs, renovations, and how to include them in property loans when possible, how to comply with requirements from banks and government offices, bureaucracy, and so forth. So a really wide range of topics there, but still very much a deep dive today as well. So enjoy the conversation, and I'll see you again on the other side. Right, back with the Japan Real Estate Experts panel. I'll just do the intro of myself quickly. We got Tracy, the Minpaku Queen, all things related to short-term stays, including consulting for short-term stays for people overseas as well. So don't feel that you're obliged to be in Japan to get her services. And we got Matt there, who is in charge of everything abandoned, dilapidated, and otherwise vacant, mostly in the countryside, but not only, you said, right?
Yeah, although honestly, I wouldn't. It seems that the metro area abandoned stuff is just like across the board, just ugly. Yeah, whereas the rural stuff, there's much more opportunity out there. But yes, technically speaking, we can do city stuff as well.
And we have the Japan Real Estate Experts panel, JREP, and we're also going to have Blanca, our renovation expert, and Emil, our Tokyo family home and mortgage expert, joining us hopefully at some stage today. But yeah, so how's your week been, folks?
It's not, look, I'm not sure when this is going to broadcast, but it's just gotten hot here in Tokyo. So,
kind of like a snap.
Yeah. Well, it was 2 weeks ago. I was in Yamanashi in Yamanakako, and it was dumping snow. And then,
right.
Yeah, and now I'm back in Tokyo, and it's hot as heck. This is my favorite time of year, though. Like, after the cherries, before Tsuyu is my absolute favorite time of year. It is, the sky is blue, it's warm, you can, you don't need a big coat, but at the same time you can sleep at night. It's not, crazy hot all the time.
Yeah, give it 5 or 6 weeks.
Yeah, I know. It's this 5 or 6 week window. What do they say? How many seasons does Japan actually have? It was like 56 or something. Like
365, actually.
365 seasons in Japan. Yes. This is my absolute favorite season before Tsuyu. Tsuyu is just nasty.
Yeah.
Yeah, I'm really not looking forward to it this year, considering how extreme this spring has been. It only actually occurred to me recently that like, hey, wait a minute, I'm usually freezing my ass off during like cherry blossom season. Like I'm very hot right now. Like this is not normal.
They survived very long this year too. I think because there was not too many big rain, like storms or whatnot. They were actually around for like a good long month, I think.
Yeah, I've still got them in Yugawara. You know, they're definitely nearing their end, but there are still sakura around, which is nice.
With all this new sort of growth that you've got, Matt, that's, you know, you're going to really find it with the humidity. You're just going to go, ba-doing.
Yeah. Well, I'm looking forward to seeing what happens.
You should weave cherry blossoms in it, man. That'll be gorgeous.
But it's got to be much longer first. But yes, kind of like, what was that movie about the Finnish cult?
Summer.
Yeah, Summer.
Oh my, that was such a good movie.
It was pretty good. I critique everything that I interact with, so I have a few things about it. But yeah, it was pretty good.
What was it called? I forgot now. Summerfest, not Summerfest.
Yeah. Somerville.
Midsommar.
Yeah, Midsommar.
Yeah.
There we go.
Yeah. I'm a big fan of horror movies, and usually when they're not gory or creepy enough, I go, yeah, that wasn't so scary, but that was fucking scary.
Well, I mean, honestly, I grew up with the whole gore and slasher scene and, you know, body horror and Cronenberg and stuff like that. Still appreciate it from time to time, but I do believe that it's largely overdone and that psychological horror is really the one to go for these days.
Yep.
So
absolutely, but that's on the topic. Oh my god, I could go about this for hours.
Yeah. So cherry blossoms. Once I'm able, I will weave flowers into my beard.
So have we had any questions from our watchers, listeners, recorders? Like, has there been any questions from the gallery?
Well, we don't get them directly related to the podcast, but the Japan Real Estate Group is very active with questions, and a lot of Nepalese advertising properties for rent for some reason. But let me just scroll down. Okay, well, this is probably one that Emil would be able to go on about, but somebody was asking if there's any real advantage to purchasing in cash versus mortgage one way or the other. And the only thing that I need to tell them from a cash buyer perspective, because that's most of our clients, is that you can always get your foot in the door a lot quicker if you're making a cash offer, as opposed to waiting on bank approval. But I don't know, anyone else got any thoughts on that?
That's exactly where my mind went to, Ziv. It's comparatively very easy and quick to make cash purchases. If you want to go the financing route, all well and good. Prepare to wait a few months at least.
Yeah, definitely.
Cash has always been king in Japan. Always been.
Honestly, let's take it a little further. And you know what? Let's even go back to the psychological horror conversation that we kind of just had. In that, not only are you going to wait some time and stuff, but you're going to be jumping through hoops. You're going to be interacting with bureaucracy. You're going to be interacting with a whole lot of red tape, and you're probably going to be pulling your hair out at one point or another, which is to say this is going to color your perception and experience of the entire purchase process associated with your property, which means you might actually end up associating those experiences with the property itself, which might ultimately negatively affect your entire experience with said property.
That's a very interesting.
That is that is woo. That is woo out there. So
yeah.
But certainly, if you do have like a big chunk of change to drop on, to drop into a property, other people are going to be running that for you anyway. So it's unlikely that you're going to be doing all the grunt work and the leg work.
Yeah. So
and in Matt's world, and I think also in your world, Tracy, because when you apply for a loan, you need to tell them the purpose of the property, like what's the property actually going to be used for. And I guess they don't really like Minpaku that much from an investment loan perspective, right?
well, supposedly Mizuho Bank have a product that they were pitching together with Airbnb. Finance your Airbnb using Mizuho Bank. I haven't seen that advertised much anymore, and it was really just to get some PR.
It might have been a pre-COVID thing too.
It was definitely a pre-COVID thing. Absolutely. But I mean, even from my experience, I started up a GK, a new GK. I moved it from one of my other companies just to spin out just the Minpaku stuff. And getting a bank account has just been a nightmare because the banks just don't like Minpaku. And it's like, this is the core of my business. It's a fully incorporated business. It is legal. It is licensed. I've got the hunkos, but they wanted a pint of blood and to see the copies of the licenses, and I still haven't got the bank account. So it's a real pain.
Do you have to be that specific when you apply for the bank? Can't you just say you're in rental properties, for example?
Not for a corporate, not when you, actually, maybe I should just apply to a different bank and just not mention it's Minpaku, but because you do have to state the nature of your business when you are applying for a bank account. But I mean, and if you go online and just read what people say about, Japanese retail banking, it's just a nightmare.
It's because we've been doing the new business and now we're helping people apply for bank accounts when they arrive in Japan and stuff like that. So
how's that going for you?
Awesome, actually, very, very awesome. And I mean, our business is doing well too. We're just hiring 2 new staffers and renting a new office next door, so we can have a shacho office and then staff office kind of thing, so we can actually focus on our work. But regardless, I mean, so apparently PayPay Bank do offer commercial accounts as well, and the online application process is very easy in comparison to a retail bank.
And that's a full bank. You can accept money from overseas. You can transfer money online.
Well, they do have a Swift big code, so I'm assuming they take funds from overseas. Yeah, and you can definitely. It's an online banking system, like any other, like Shinsei, like Sony Bank.
And it's
PayPay. Go ahead.
I was going to say it's PayPay Bank, right?
Yep.
Oh, I do
which was bought out, or somehow it was another bank before it was PayPay Bank, and I forget which bank it was.
Oh, I did not know that. That's interesting.
I'm looking it up now because PayPay Bank Corporation.
Because for the rock and roll stuff that I do, one of the accounts that I was basically sending the charitable work that we did, one of the accounts that I was working with was Japan Netto.
Oh, okay. Japan Net Bank.
Okay.
Yeah. And I remember going to pay out and being like, hey, where the hell did your bank account go? What is up? And then I asked him, he was like, oh no, it's PayPay now. I was like, oh, that's okay.
Oh, okay. I will check it out. So, and you can do sort of internet banking as well, like footy-commies and stuff from your phone, all that jazz.
Yep. I mean, all of them offer that. We actually had a customer sign up with GMO Aozora Bank, which is also an online bank, just recently. And surprisingly enough, they don't accept international transfers. I've never seen a bank that doesn't have a Swift big code.
That doesn't surprise. It's GMO affiliated.
Okay, I didn't know anything about GMO. Why is that?
Oh, I thought I heard you say that it was.
No, it was. But why do you say that? What's GMO?
Oh, they're just one of my. So they're the ones who run.
Hate them.
Oh, they're the worst. I hate them.
They run
onamai.com. They're the definition of the worst type of business Japan can possibly do.
It is.
Everything about them are awful.
Oh, they're awful. They're just awful. They're spammers. They're predatory. It's just icky, really icky. All right. And if you're watching this, I don't care.
Yeah, really. Get off of GMO. If your domain is part of GMO, talk to any one of us. We'll help you find a different provider so that you can get out of that shit system. I'll do it for free. I hate them.
Yeah.
It's really interesting though that such a you're saying there everything that's bad about Japan business practices kind of thing, which to me translates as old school.
Very.
So why would an old school company like that set up an online banking system?
Money. That's why.
No, but I mean that's
squeeze you.
That's out there, cutting edge.
Well, so that's the weird thing about them. Is one of many weird and terrible things about them is that they're major players, at least domestically, in a lot of the IT scenes, and their products are absolute garbage.
Really?
Like they have no chops with anything. And yet they're this huge name with a whole bunch of backers, and they got their claws in all kinds of business. Oh God, I'm so happy, Tracy, that I finally found somebody who hates GMO.
Hate them.
Well, to our client Huey, if you're listening to this, I know you usually listen to the podcast. Don't worry, we'll get you to a new bank account as soon
find
as
anything else. Anything is better than GMO. Like even Mizuho and all that stuff. Like they are, I guarantee you, even Mizuho would be much better than the GMO product.
Yeah, the problem is with a non-online bank, they're not at all happy to accept a company that's registered under a non-resident, right? That's the major problem. Whereas the online banks are a bit more lenient on that.
Okay. Well, yeah. So work within those parameters, but geez, oh man, get away from GMO.
Yeah.
Wow. Okay. No, I'm really going to look at PayPay today. I'm going to, get my VA to maybe go and open up a bank account for me there, because I've been searching and searching. It's really, really hard.
Yeah, that's probably we should probably talk a little bit about the Japanese banking system while we're at it, because that's a thorn in the side of a lot of would-be real estate buyers and or investors, whether they're residing in Japan or out of Japan. As long as they're foreigners, it's always going to be an issue, isn't it?
Yep.
Yeah, I mean, I'll just tell the story of when I bought my house. It was basically in cash, and it was like, all the transactions were in cash, and this is only 5-6 years ago, and it was a really horrendous process, because there were bricks and bricks of cash that the stamp duty was being paid, and the vendor was being paid, and and the agent there was being paid, and it was all in cash, and it was all just sat there with, it was salaryman feeding frenzy, basically, because they're all, they're all Japanese salarymen in their suits, and they're all just like salivating at all this money just being, transacted, and like my husband and I are just sitting there going, what the hell is happening? So, because buying property in Australia, the part when the conveyancing has been done and the title change has been done, the parties are in separate rooms, and it's just papers that are going back and forward for signing and stamping. But we were just sitting across from each other. It was like, I wish I'd been taking a video. It was just
suitcases of cash, right? Emil was talking about that.
It was the weirdest thing. Yeah. And then stamp duty is actually in stamps. It's just like...
Oh God, yeah.
It does feel like you're conducting a drug deal each and every time, doesn't it?
Well, no, I mean, it might as well be, right? The lack of escrow is nerve-wracking, to say the least.
Yeah.
It's very much something that we have learned to be like maybe warn is not the right, but like bring this up far in advance of an actual offer being put in. Of like, just FYI, if and when you do want to make a purchase, it's almost guaranteed that we're going to be doing precisely, what Tracy just described, which is not ideal.
Yeah, but I mean, the fact that there's Emil's chair, at least, the fact that there's a judicial scrivener involved who actually confirms that money has been remitted before they actually release the title deed, and the fact that Japan is very much a legal recourse kind of environment, right? Like, it's not like somebody's going to run off to the hills or relocate to Indonesia with your cash or what.
Well, it's not so much. I mean, I've seen it happen any number of times now. So for me, like when I'm viewing this, it's like, okay, that's what happens. It's really not an issue of kind of like fear or risk or trust, because as you said, Japan's pretty reliable in this stuff. Like, I'm not particularly concerned. I mean, not zero, but not particularly concerned that, somebody's going to come in, swoop in, and like steal the money or whatever. It's pathetically Luddite
Yeah,
is what it
that's
is.
true.
That's what it is. Yeah.
It is shamefully dated, like embarrassingly so.
Yeah.
And that right there is, one of many indicators or examples of a lot of the problems with major institutions conducting their business in Japan, like GMO. Is that, does it get done? Yes. Is it safe? Yeah. Right. Is it best practice, efficient, comfortable, like any other good qualifier? No, it's an absolute nightmare that once you, it's a gauntlet that you have to run through, just like, oh my God, hoping that something doesn't go wrong, even though you know that it probably won't. And so it's not, to me anyway, it's not a matter of fear of theft or something bad like that happening. It's just, what the fuck? Make this better. This is 2022. Okay. Like, these resources have existed for decades now, and yet you still refuse to use them. It's shameful.
We do have a few agents these days that actually accept digital signatures, so we're going somewhere with that.
Wow.
Yeah.
Hi, Emil.
Hi, Emil.
Hey guys. Well, wow. Are you guys talking about the purchase process?
Well, we're just talking
banks and money.
Banks in general, and about, like, if you are bringing cash over, what you could expect, but how sometimes working in cash is better than, waiting for, if you're doing a commercial deal, than waiting for finance.
It was a segue from that question. You actually had a lot to say on that question from the Japan Real Estate Group on Facebook. By the way, somebody who is still not a member of this group, it's a really good source of information. A really active community. But Emil, you remember that guy who was asking, is there any real advantage in purchasing in cash versus mortgage?
Oh, yeah.
Yeah. And we were just saying that, cash is king in the sense that you always get your foot in the door quicker and everything will be smoother. But otherwise, obviously financing gives you the other advantages that you keep harping on about, right?
Yeah. So I remember that post, and that one it wasn't, like when we talk about cash is king, cash versus credit or financing, it's really, when it's the same thing. You go to buy a TV from Big Camera for electronic shop, you can, if you say you're a cash buyer versus, or a used car, cash versus credit or loan, cash is just easier. There's no hurdles to go through, and there's no sort of, for the paperwork, there's no possible risk on the seller side. It can be done quick and easily, and also there's less transaction cost, right? When you pay credit card, the merchant needs to pay a fee. That's almost 2% right there, I think, right? Straight off the bat. So cash is easier. That said, this particular question wasn't, the cash is king doesn't apply to that, because it's not the same purchase. One of it, you have, 10 million yen, $100,000. Is that purchase, is that investment better than, so cash only, it's a $100,000 investment, 10 million yen.
Does it make more sense financially? Yeah.
Well, financing, it's a 50 million yen purchase. So it's not the same. You're not comparing the same. So to say cash is king, well, yeah, if you want to buy 10 million yen property, but I'd rather a 50 million yen property for the same cash outlay. Right. So I think it's completely different. Like, that expression, I think, doesn't fit into what that idea that that person posted, that, I'm going to get a better deal if I buy in cash, because you're only getting 20% of the deal. And that's why I think leverage can be really good. And his calculation had a massive, massive oversight. And I posted that, saying that this is a really erroneous way of calculating. And that was his calculation. So just so people can have a quick, have you already explained what the question was? Or
I didn't go into detail. No,
okay.
just vaguely.
It was essentially, if I have 10 million yen cash, should I buy? The question was, what's better, buying a property using cash, so 10 million yen, or financing? And if you finance, often you need to put a 20% deposit. So it's 10 million yen deposit and 40 million yen financing. So if it's cash only, it's a 10 million yen property investment. If it's financing, it's a 50 million yen property purchase. 10 million is your cash, 40 million is the bank loan. And one of his calculations was, if of my, I'm getting, I think he said about 180,000 yen rental return. but 150,000 goes towards the mortgage. And so, but he classified that mortgage expense entirely as an expense.
Whereas it's not an expense at all, is it? Except for the interest part of it.
Precisely. Only about 30,000 yen to 50,000 yen would be interest. The other 100,000 yen is going to principal. So you're not only making, like, cash flow is 10 to 15,000 yen a month positive cash flow, but actual equity, like actual return, is 115,000 yen a month, right? And when that comes up to over 10 times what he was coming up with, instead of I'm only getting 10 to 15,000 yen a month, you're actually getting 115,000 yen a month, and so that's just completely incorrect way of looking at it. I think in general,
I think one of his arguments there was that yes, I'm paying towards the principal, and I end up, at the end of it, I'm ending up with pure profit when I start. But then I'm investing in something that actually, Japan being Japan, is actually depreciating. So by the time I'm done paying the loan, it's not worth nearly as much as I originally paid for it.
Definitely. So the building will depreciate, but generally not as fast as you're contributing. So at the end of 35 years, or just say whatever the duration of the loan, is the building worth zero? The answer is no, which it generally is not, because
the
otherwise
property is definitely not worth zero.
The property is not worth zero. Like, there's going to be residual value in just the land or the asset at least. That's why you can't go out now and buy a 35-year-old property for nothing. Even
in Matland,
in Akia, even in Akia, you can't really go and get something for nothing. It's quite difficult, or it's going to be ridiculous. But if you're considering buying a 50 million yen property in Tokyo, or almost anywhere, a mansion, there are no 35-year-old mansions for free.
No.
That you can actually use as an investment. That is not an absolutely complete piece of junk.
Hey guys, I got to jump early. Apologies, something came up, so I got to go attend to that. Good talking. See you later.
You're right.
Hey, Matt.
See you. Yeah, there's a point there, and also, I mean, currently at least, I know that it's nothing to bank on for the long term, but currently at least, Tokyo new condos are selling for higher than they sold pre-bubble days. So we're definitely not in a depreciating market, at least not in central Tokyo and Osaka.
Not at all. Not at all. I've got one client. He bought a mansion near Sangenjaya in 2019. So it's that 3 years ago now. It was like at the time it was like 9 or 10 years old. I think it was built in 2010 or 2011. He bought it in 2019. So so under 10 years old. And now he's buying a house. He's bought a house, and so he's going to sell his mansion. He got married, and sort of family structure is changing. So and I think it's basically, I think it was like in the mid-50s that it was purchased for, and now we're going to relist it between 65 and 70. Starting is about 70, right? So he's had it for 3 years, and we're relisting it for about 10 million yen. 10 to 12 million yen on top of the purchase price. Okay. So he's paid off, what is that, like, I think 3 to 5 million yen over the past 3 years he's had it, plus another, hopefully 10 million yen of just profit.
So for the moment, at least, there's actual capital appreciation profits to be made in Japan, which is the first time I've seen it in the 10 years that I've been working here.
Actually, to be honest, I think over the part, like in Tokyo, at least anyway, if you get a decent property at the beginning, if you bought any time over the past 10 years, you would be selling for better than more than your purchase price.
Yeah, fair enough. We don't work in Tokyo that much.
Yeah. But I think we had pretty much since 2013, since Abenomics started, right? And that's when I think Olympics were first announced, and they were just like real general hype and pump, and just a lot of economic sort of stimulus going. There was, especially Abenomics, whole entire approach was quite steady. It's been a steady increase, whereas previously it was very flat for a long time, and then we start to see the increase. And even then, we're talking like just a few percent year on year, nothing ridiculous like we're in Australia. And so that's just 20% year on year, kind of 10% year on year for the past 3-4 decades. Whereas this is more stable growth.
Yeah,
but it's been there. It's been very, very firm. But Ziv, I think it's really important. We go back to that point. I want you to contribute. the person on Facebook, I think how they did their analysis was, it just wasn't a very I'd say standard approach. I think they said, I'm paying about, I'm going to like for 50 million yen, I'm paying about 150,000 yen in this, about 15,000 yen in what's it called, in management fees and stuff like that. And then I'm also paying the cost of the closing costs, which is another 2 or 3 million yen on top. And this is what I'm getting per month.
Yeah.
It wasn't like we would never, like, well, I know you wouldn't, and you do mostly investments. That's not the way you structure the numbers when looking at the revenue and expenses and what the net yield is, right?
It's not, well, it depends on what you're investing for, because we do have a lot of customers that contact us and say, look, I want to buy something that gets me, $500 in my pocket every month, right? And if you're coming in from that perspective, then yes, you would maybe structure the amount that you would borrow versus, because they actually want cash in their pocket for, I don't know, for shopping, for paying off another mortgage, what have you. They want to make sure that at the end of the month, they're left with actual cash that they can keep and use.
Oh, so
liquid cash, right?
Yeah, sorry. So what I meant wasn't that. So there's two ways to look at it, like net return, which also includes your mortgage repayment equity portion, principal portion, or cash flow, right? That's fine. And you can go either way. For some people, that one is more important than the other. That's fine. What I meant was the way he just presented the numbers.
Yep.
Felt like it felt quite unusual, right? So I want you to go through that. Usually when you look at the numbers, there's the cost purchase and ongoing, and like there's the cost basis calculation.
Yes.
And then there's the ongoing expenses.
Yeah, I think the way that he posted it, at least, I'm not sure if that's, a mistake in an error in his thinking or an error in the way that he actually, wrote the words down. But the way he was presenting it's if all of the contributions toward the principal were just gone into the ether kind of thing, right? Like I'm paying every month 80, I'm just looking at it now, 80,000 or 100,000 yen per month. And I'm not getting it. Whereas if I pay cash, I'm going to be getting it directly into my pocket. It seemed as if he doesn't actually understand that he's paying off a property, which is going on at the end of the process is going to be his. Yeah. And it's going to be a much bigger, more expensive, better resale value property as opposed to the 10 million one.
So when like looking at his numbers, how would you describe, like when you're doing, okay, you've got the Excel sheet open, what would you put in the, in the cost expense, and then sort of like the purchase price, and then the ongoing revenue? Right?
Well, we don't really deal with financed properties. So our Excel sheets are a lot more simple in the sense that we have pure cash amount paid, pure cash amount earned every year after all expenses, and then we get both a monthly or an annual amount and an actual ROI number percentage-wise. We don't need to factor in all of these calculations, but again, with Japan's interest rates being what they are, I wouldn't think it would be that much different to run those numbers.
Yeah. So the only thing, correct me if I'm wrong. So the only other cost with the mortgage is the cost of interest.
Yes, that's correct. That's exactly what I'm saying. Yes.
Yeah. So
we interrupt this broadcast. I always wanted to say this. We interrupt this broadcast to tell you about Tokyo Family Stays. They're a short-term rentals company in Tokyo, and they offer a home away from home experience, which is just perfect for remote working, quarantining, or if you just need somewhere quiet to hide away from the world. So they offer a variety of options for families, for corporate relocations, or simply if you're transitioning between homes in Tokyo. Now, the properties are super comfortable, tastefully furnished, fully equipped with all amenities, and they accommodate up to 10 people. So really the only thing you'll need to bring with you is your toothbrush and maybe a change of clothes. They've got fast, unlimited wireless internet, dedicated workspaces, and fully equipped kitchens, and they're just a delight to stay in, a fantastic alternative to Japanese business hotels, which if you've ever stayed in one, you probably know they're tiny, they're noisy, fine for a night or two if you're on your own, but long-term or with a family, you'll probably feel you're in a jail cell very quickly. So if you want to give yourself a sense of space and freedom by renting a real home with comfortable Western beds, including all the necessities like baby bedding, children's toys, high chairs, you definitely want to reach out to Tokyo Family Stays. They've been at it for over a decade. They're a fully licensed Minpaku or short-term stay operator. And as a special bonus for our viewers and listeners, they're also throwing in a breakfast basket upon arrival for anyone who books and mentions the Japan Real Estate Podcast or NTI. And not only for guests, if you're a property owner, you've got an investment property that you want to tweak for higher profits, or a holiday home that you want rented out when not in use via short-term stays, drop them a line today. See how they can help you maximize your property's income. And again, as a special bonus to our viewers and listeners, they're also offering a free audit of your existing short-term stay listings without any obligation whatsoever. So feel free to reach out to them at tokyofamilystays.com. Well worth your visit. And again, if you're in the market for a family home in or around the Tokyo metropolitan area, Emil's your man. Don't be shy to reach out to him as well at emil.gorgees, Gorgees, at tokyorealty.jp.
Yeah. So, but okay. So let's go through and clarify. When you're looking at a property, what are the expenses we look at?
So the purchase expenses are the real estate agent's fee, the brokerage fee. There's the purchase tax, which is a statement that you get down the track after the settlement. And there is, if we facilitate the purchase, there's our fee as well, which is quite similar to the brokerage fee again. And then there's legal and registration fees, which can vary significantly depending on the actual evaluation, official evaluation of the property versus the market price. So generally speaking, cheaper properties could come up to maybe something like 5 or 6% in legal and registration fees, whereas more expensive ones, and from our perspective, because we deal in cash cows a lot, from our perspective, more expensive ones could be anything above 10 or 15 million yen. Those tend to go towards, slowly shrink towards 1% or slightly less if you're buying something that's, say, $500,000 US or what. And then management fees, if it's a house or an entire...
So that was right now, the cost that you closed, that you mentioned, that's the costs for, that's a one-time initial closing cost.
Purchase costs, yes, one time off, and they don't differ that much between whether you get a loan or not.
Yeah, so let's say, so whatever the property value is, let's say it's 10 million or 50 million, like these are the two examples we had in this Facebook post, 10 million yen or 50 million yen cost, it's still about the closing costs of those items that you mentioned are anywhere from about almost 10%, I think in your case.
The price, because you've got our fee as an added factor in there, which can also be somewhere between 3 to 5%. With very cheap properties, we do take into account that it could be as bad as 16, 17%. And with properties that are, let's say, 40 million yen and over, it usually amounts to something like 10 or 11%. Without us, it would be something like maybe 7 or 8, worst case.
Yeah. So that's what I find with general home loans, about 5 to 8%, depending on the financing cost, but about 5 to 8% is the cost when buying your own personal home. Sometimes we can wrap that up into a loan. I think in your case, there's your additional fee on top, which adds a few percentage points. Yeah. So that's, looking back closer to around 10%, give or take. Okay, but that's sort of what you consider for the purchase of it. Now let's look at the ongoing monthly costs. So the only source of revenue is the rental return, the rental.
Plus that's maybe a parking spot if you got one of those. I mean, that's rental as well, though.
Okay, yeah. Well, let's get that little complexity out of it. Just rental for the property, right?
Yeah.
Or if it is whatever it may be, it's rental income. There's no other sources. But then expenses. Let's just run through, like, these are the ongoing monthly ones. What do we have?
So we've got insurance, which is minute in Japan. Really, really cheap. That usually amounts to, I'd say, less than 0.5% annually or something of that sort. And then we've got the property manager's fee, which varies. If you own the entire building, it might be lower, but usually is around 5% plus tax, so 5.5%. And you've got our own management fee, and we've got a minimum cap on it, but let's assume you've gone beyond the minimum cap. So it's going to be 2% plus tax. Portfolio management fee, if you need us to facilitate communication with the building management company, the insurance company, the property manager, you need somebody to centralize all of that for you. And then you've got, so there's a big difference here in whether you're owning an entire structure or if you're owning individual units in a condo. So if you own individual units in a condo, I can't really estimate a percentage for building fees because it varies significantly. It could be anywhere between 5 or 7% and all the way up to 30% of your gross monthly income. So if the building is rather old and requires more maintenance, or if it's a rather fancy building and there's a lot of on-site management, those could go up to as much as, say, a third of your rental income. But if you own the entire structure, then we usually, I mean, we'd have some numbers based on previous years, but we usually factor in about 10% of the gross rental income that goes towards maintenance, renovations, and so forth. And then that grows as the structure gets older. It might get to 15, 20%, which is usually when you'd start consider reselling it.
Okay. And then asset tax every year?
Yeah, so with the taxes, we don't evaluate that ahead of the deal because we would only know the actual amounts very close to settlement. Asset tax also varies depending on the size of the property and the age of the property and the location and the official evaluation, but it's usually somewhere between, again, for pricier properties, maybe 0.5% per year, and for cheaper ones, it could go all the way up to maybe 1.5% per year. That's the worst we've seen so far. And then there's your individual taxes. So if you purchase an individual, it becomes a part of your normal income tax payment. And if you purchase as a company, you've got your corporate tax on the rental income.
Okay. So there's the management fee, maintenance cost, insurance, and asset tax, annual asset tax.
Correct.
Right. And then interest
and property
if
management.
You have a mortgage.
When you say management, there's property management and then there's building management. If
Correct,
you purchased in a condo, yeah.
Correct. Yeah. Okay. So there's a few items. One thing. Sorry, Tracy. We're going on the thing, and I haven't even spoken to you. I said I really. I just want to cover this one last cost thing, and then I'll shut up. The other one that I think gets overlooked and is always probably one of the more complex aspects of taxation for people that are not overly familiar with it is depreciation, building depreciation. So what you can do is the value of the building, let's say like for a property, like a building in Tokyo, let's say if the land is 50 million, the building might be about 30 million yen in value. Well, I'm talking like just a house. Okay. Let's keep it easy.
Hey, Blanca.
Oh, hey, Blanca. How you doing?
How are you?
Welcome. Very good. Very good.
Emil's just finishing one explanation and then we'll officially introduce you. Hang on.
Thank you.
Okay. Yeah. So let's say the building, we got the house, the land is 50 million, the building is 30 million. That building is what you can depreciate over, well, whatever the life cycle says. If it's a brand new wooden building, I think it's 24 years you can depreciate. So 30 million divided by 24.
Or 24, yeah.
Yeah, is about, almost a little bit under, a little bit over 1 million yen per year. If you buy it used and it's already had, if you buy it, it's already 10 years old, then the tax office has a slightly different way of calculating the remaining life of the property. But anyway, what you can do is what your income comes in, you have the depreciation value, you can start depreciating.
According to the accountants that we've been working with, and I wouldn't presume to know exactly how it works, but there are two potentially different ways that you could assess and then decrease your depreciation contributions. Some of them work better for newer buildings. Some of them work better. I mean, there's a couple of ways they can do that.
Yes, there are. So there are multiple ways on the same building. I think there's two different ways you can assess it. Like I know there's straight line, and I think there's another curved line approach. But for the depreciation timeline. But the point I'm saying is, if like that's still for a brand new property, I think it's still over 24 years. And whether most of it gets done in the first 10 years or it gets evenly distributed, that's something you can speak to the accountant about. But what I'm saying is, let's say that you buy the building, it's already 10 years old, right? It's got a 24-year lifespan, but you bought it at 10 years of age. So do you just have 14 years of depreciable life left on it? Or is the calculation different? Or in the cases where you buy a building that's already over 24 years old, it's already finished its depreciable life cycle. So then what is the depreciation calculation? And the tax office have different ways to give you the remaining lifespan of an asset that you buy, depending on the age of how it is already. So that may also be beneficial. Like depends on your particular circumstance.
And for concrete
One
buildings,
maybe
it's 47 years, I think. Yeah,
it's 47, and that's why I think sometimes I see a lot of I prefer concrete buildings. I think for an investment, like just in terms of the quality of building and stability of a building, it's more expensive, but it is just a more literally solid building.
On the long run, it's far less maintenance too.
Exactly. Yeah. But if you build brand new, your depreciable life is, that is over 45 years, not 24 years. So you're getting about 50% the amount of depreciation on it per year. So that's going to significantly change the return that you're getting or your tax liability for the life of that investment.
Unless, and we've touched on this last week when we first spoke to Blanca, unless you're planning to do some renovations and then concrete makes everything much more complicated, doesn't it? So Blanca, Emil, sorry, you haven't met first time she joined us. So Blanca, please introduce yourself.
Hi guys, thank you for having me. I'm sorry I'm late today.
No worries.
And I'm the co-founder of Arc Reform. We are a bilingual reform company that is serving Chiba and Tokyo, but we can basically serve customers in the whole Kanto region. And one of our niches is we are bilingual, so we can discuss with clients about the projects in English and in Japanese, and we can also provide contracts and the quotations and everything in English as well in Japanese. So that's where I think the easy approach to reforms comes in, because we speak not only English and Japanese, but we speak many languages in our company. So we are breaking barriers.
Yep. And this is Emil. He's our Tokyo family home and mortgage expert. And we were actually, I think a couple of months ago now, we were talking about potential loans for renovations, right? Like whether they can include renovation components or even rebuild components. Is that a thing?
Absolutely. You can get a loan for reforming your property usually without a problem. We've done it with the client. What they needed from us is the Mitsumori, the quotation. And with that quotation, they went to the bank of their choice and secured the loan in the amount of the renovations. They got a little extra because they were doing some extra work, but at that point they got about 5 million yen for their renovations, and this one was a local bank. So you can easily get a loan for renovations if you need to. And we are right now actually as a company, we are in dealings with Orico, and at that point the loan would go through us. So the customer will not have to deal with the bank themselves. They would get the loan with Orico through us for their renovations.
Okay, so kind of like a real estate agent, you can actually handle the loan application for renovations as well.
We will be able to do that. I would say within next month.
That's brilliant.
We should start. We are doing it right now. We are filling in the applications. In Japan, everything is a lengthy process.
Yeah. And that was the first part of the conversation. You missed that, yeah?
Yes. And because, we have two offices, we have Tokyo and we have Chiba, and the Chiba office is right now being built. So, of course, Orico wants to wait for the office to be actually built up, because they have to do inspections. One of the conditions was, for example, we have to have a private meeting rooms and stuff like that. So until they see the private meeting rooms inside the showroom, we cannot sign the deal and everything. So we are waiting, but our showroom's going to be finished within this month. So then from May, we will have the contracts, and then we'll be able to help our clients that way.
That's ridiculous that they're asking. Sorry, going back to the bank conversation. This is like the schools telling us that what our kids are allowed to do after school or not. How is it their business if you got a meeting room in your showroom or you do it elsewhere?
So
they want to make sure, I think, because when it comes to all this, it's a lot of private information of the clients that you are handling. So we have to have a very secure servers, and then you also have a private meeting room so nobody else can hear the conversation that goes on between you and the client and stuff. So, I mean, I can understand that. It's not a problem. We have the space, we are building it. It's just that, took 2 months to start building in Japan, jumping through the real estate hoops, getting the property and everything. And then, now just finishing up. But, everything, if you submit the right papers and are able to go with them through the hoops, then you can actually easily get what you need to. It's just the bit of it, but.
Yeah. That's what I was going to say about Japan. They have so many hoops, but those hoops are clearly defined.
Yeah.
And it's just a lot of administrative hoops, but there's no ifs or buts. If you meet these requirements, this is what you need, and you can go through it.
For me, is when you know what you need and you are able to bring them the papers or give them the documentation they need and fulfill their requirements, then you will get
Speak
it.
their language, yeah.
Well, that's where the bilingual part comes in, luckily, because we have a great staff in the office.
No, I mean, like speak their legalese or paperese language. Like, this is the name of the document, and this is when it needs to be submitted, and this is the process, right?
That's the whole thing. That's why I'm late today. All the meetings with lawyers and with tax people and everything. It kind of takes time, and a lot of stamps. And then I was almost here, and then you're like, oh my God, one more stamp missing. So then had to go back, do the stamps and stuff. So. It's a lot of stamps. If you see my working bag, my husband is like, it has like 20 kilos. What are you carrying there?
Sorry, Tracy, you were going to say?
I was just going to say, it's the same in Minpaku as well. It's like everyone said, oh, look, it's so hard to get a license. It's like, well, not really. If you know the check boxes, because at the end of the day, the people issuing the licenses, people issuing loans, people issuing like certificates,
checklists, right?
They just want to be able to have deniability. Everything was checked, not my any problems, not my problem. I did my due diligence. Everyone just wants to have no ambiguity, and if it can fit within a checkbox, then everyone's golden. So and that's, like I said, it's the same with Minpaku. It's like with the hotel license as well. We made it like we had to have a front desk. Excuse me, doing inverted commas, had to have a front desk. You know what I did? I got a pop-up table, like a collapsible table, and took a photo of it and went, this is our front. I mean, the hotel's in my house, to be fair, but like we needed it. One of the check boxes was you need a front desk. Here is my front desk. Here's a photo of it. Yep, we've checked that box off.
See, Tracy, you're saying it's checklisted, but I'm sorry to say this, but a non-Japanese entrepreneur, or maybe an entrepreneur, no, but let's call it a typical Japanese salaryman who's trying to do this on the side, would never think to take a pop-out desk and just take a picture of it and send it to them.
But they tell you, though, like the ward office, like
the ward office will tell you. They'll say,
okay. Any kind of desk will do. Okay.
Well, it needs to be. I remember when I was looking as well. They're like, because I asked, could you go there and you inquire? I mean, for the most part, they're quite helpful. Setagaya, very, very helpful. Shibuya, not a big fan of their Hokkien, like that particular department.
Suginami.
They're not me, but
Suginami have been awesome.
Different wards are great. Like Setagaiku is so helpful. But they tell you, like, the purpose of it is that when someone comes, you have a place to check their stuff and present and show them some rules and fill out documents. And that's a desk, and that's the purpose of it. So even a pop-up desk is actually fine. It doesn't need to be a permanent fixed desk, but some place where you can do that activity. And similar to what Blanca was saying as well, they want to see an office where you can have a private discussion, because if they're going to give you permission to act as a representative of the bank, or the financial institution, they're giving you a certain level of credibility.
Yeah.
Okay, because they're a big name. It's a financial institution. They're giving you a certain level of credibility, and they're saying you can submit these documents on our behalf. But they need to know that you're not going to go and scam people, or that it's a certain minimum level of standard that they want, right? That you're not going to Starbucks to talk about, their private financial matters. Okay, what like, is this really this Orico resales person? He's just coming, meet me in Starbucks and discussing it all here? No, I
I've
want to
seen
go
people
to like,
doing job interviews in Starbucks. It's pretty normal here,
Yeah.
actually.
They've done it, but this is not. But the bank giving their name is, I think, is the line. That's where the bank is saying we're not going to do that.
Yeah.
Yeah,
For our
but
representatives.
like I think for us it's also with the sensitivity of the information that we get from clients.
Oh yeah.
Our computers are secured and they are basically tied up to our locations. We cannot even take them out. Even the laptops, we cannot take them out of the office because, you know, the sensitivity, if there was a leak, it would be huge because we have all our customers' information there.
Financial information. Yeah.
Different computers that we take out of the office and different ones with that system that stay inside.
Yeah.
Where's your office, Blanca?
One is in Azabudai.
Oh, very nice.
Yeah. Close to American Club.
Yeah.
So
Or-
we'll probably have to sign off soon, or at least I will. You guys can carry on. But I wanted just to ask, just to clarify for me on the renovation loans. So this is doable both for a property that I'm currently purchasing, and I can include the renovation costs in the initial property loan that I'm going to take. I know Emil talked about that previously.
Mm-hmm.
But Blanca was saying it's also doable if I already own the property and I only want to apply for a renovation loan. So I know that's possible with a owner-occupier home, but how does that work with investment properties?
Yeah, the client was living in that property.
Oh, I think we lost her.
Rib,
Okay.
she's gone. Oh my
Yeah.
goodness.
I'm not sure about investment, if it's an investment property, but in general, yeah, like I've seen, like what's common for us is we do it with the purchase. So if someone's buying a used house, a used property, say it's 50 million yen for the property, and they have another 8 million yen of renovations they would like to do, we put that loan together, we put the quote together, and it becomes one full loan, 58 million yen. It's the purchase plus the renovation. And the bank will actually pay the renovation company directly. And they actually will scrutinize and look at who is this renovation company? Are they licensed? Because they don't want to give a loan just to any renovation company. It ends up being your friend and they don't even end up doing the work. It's just a way for you to pocket.
Do they also look at the plan? Because you mentioned some of the renovations that people do actually then don't qualify them for refinancing anymore. So do they look at what you're planning to do with it too?
Yeah, so they'll get a quote, and usually a quote will say, okay, they're changing the kitchen, they're changing the toilet, the bathrooms, wallpaper, etc. Right? So if it's usually when we talk about reform, that's the kind of stuff that they do. If it's an extension of additional room, something that will change the size or the footprint, then I think that will get scrutinized quite differently. But
Okay.
for the most part, when people are buying places, it's a used place, so it's new. Yeah, it's new bathroom, toilets, kitchen, wallpaper, maybe flooring, exterior maintenance. Right? That's usually the big ones that we look at.
Oh, she's
So yes, there's came back. Yeah. Okay. Yeah. So so they're the items that we look at. You can do it with the loan, with the purchase. And so if you're buying a new property, that's probably better to do it all together. If you already live there and you've been there for a few years, and then you want to do it, then like what Blanca was suggesting, or what they offer, I think, is that you can do it with them, and you can go to your own bank if you like, or you can go with just use the renovation company, like company directly, and they'll sort it out with is it Oryx that you said you're dealing with now, Blanca?
Orico, there's Orico, but there are banks as well. We've done one with the local bank. That one was done through the client. The client did it themselves. So there are ways to always go about it, and it's just important that the customer. I think basically what's the most important is that you have an income. Once you have an income, that's the base. That's the base, and then once you have that, then you can already discuss with the different banks about different terms of the loan. But right now, the bank more and more keen on offering loans. So even if it's an investment property, if you are a registered business, then they are willing to do it. If you are a person, if you are a private person that has an investment property that needs to be renovated, there are hoops that can be jumped through, and you do it that way as well.
So it is possible. That's what I was.
And
Okay.
for the part of some time change your Jumihyo to that address, and at that if you register your address there in the property, then you can do it. There are ways to do everything.
Oh, no, but wait, but that means that I'm treating it as an owner-occupied property. I'm talking about a purely rental property, whether I've purchased it with a loan or whether I purchased it in cash. I've got an investment property. It's generating monthly rental income, and I want to improve on it in some way. Will they lend for that?
I don't know. I cannot answer. I don't want to speculate, but as I'm saying, there is always way to figure that out. When we know more details, then we can always figure it out how it can be done. But then I think once we have for example, for us, once we have our contract with Orico, then I will know more about these things, because then I can ask specific questions as well.
That would be very interesting, because I'm wondering if I'm guessing it might be more of a business loan than a property loan, and then the terms would probably be different as well. The interest rates, I don't know. That'll be very interesting to find out.
Yeah, but then because if it's an investment property, then of course it's not a personal. It's a part of business. So there would be different terms, but there's always ways to do it.
Yeah.
Ziv, one thing I'm curious, because I know the nature of your clients. If they are, I'm pretty sure it will be quite easy if they live in Japan and they have Japan income and they want to apply for a loan to renovate either their own home or an investment property because they have Japan sourced income. What I think would be challenging is, let's say it's a client who lives in Singapore and they have
then they're never going to get a loan. That's not
a unit. Even though the domestic income, I think that won't really happen. Is one thing. I do want to ask Blanca, what are the approximate interest rates for a renovation, just straight up a renovation loan for a property you already own and live in? Like 1.7 or 2%?
No, it was less. It was less for the 5 million. It was below 1%.
Okay, nice.
Okay, so similar to the home loan.
But it again, that also depends of whether the person is Japanese or a foreigner. They have their tabs. So the client we dealt with was Japanese. So of course the terms are more favorable to them than they are to foreigners.
Okay, does it depend on their residency status or their race?
It depends on the status of the client and how to say that, and the bank, because every bank kind of deals. They have, the percentage really varies. I know people that took 4-5% loans. Yeah. Because they were foreigners and the bank that gave it to them was only willing to deal with them because they were like complicated properties and stuff. So they were willing to, close an eye here and there, but then the percentage went up based on that. So securing a loan for anything is possible, but the conditions vary a lot. There is no one number at all. Even a Japanese person can get anywhere from 0.3 to like over 1%. It really, really depends on everything, on a lot of factors. So it's always best to secure the meeting and then, discuss first. This is what my conditions are. This is what is going on. This is what, where, like my work, my contracts and everything, how long you've been working in the company where you are employed right now. Of course, small business owners, very, very difficult at that point. If you actually are not an employee, but you are entrepreneur, you are an owner, then you already have more problems.
Yeah, I got a call yesterday from somebody who he couldn't believe it. He said, I'm a business owner. I'm making over, in his case, 25 million yen a year, and they're telling me that I can't get a home loan. It was unbelievable. Yeah.
Yes, because they don't see entrepreneurship as a secure business. So the salaryman that makes 300,000 a month will get loan easier than him that makes 10 times as much. Yeah, so there's a lot of factors on it that goes into loans, whether it's for buying property or renovating property. So it goes case by case. It cannot be, there is no kind of like one plan fits all.
Sorry, Emil, you were going to say?
Yeah, like the entrepreneur side of stuff, when you're a business owner, entrepreneur, generally they want, it's common, banks want about 20% down payment.
Yeah.
So, and they want to see your business income, your profit and loss, the Kestan show for your company for the past 2 to 3 years. And they don't want it to be in the black. They don't want it to be in the red. They want it to be in the black. So any kind of losses, it's going to be like, almost blacklisted.
So even if you've paid yourself a salary and you personally are in the black, but the business is in the red, which could be a strategy for a lot of people, that's a no-go.
Yeah, well, I mean, you can, because remember how it works for corporate taxation is, okay, I can set up a company and I'm the employee of that company. And I can say the company's paying me 10 million yen a year. And so my tax withholding says I'm making 10 million yen a year. But maybe just say the company only made 4 million yen of revenue. The company's revenue says they made, the company's proper P&L sheet says they made 4 million yen of revenue, but they have 10 million yen of salary expenses.
Yeah.
So that company is just on a 6 million yen in the red, 6 million yen. And so I'm not really making 6 million yen. Like I'm not actually getting, because the company doesn't have the money to pay me because I'm the boss. I don't actually have to do that bank transfer all the time. I am going to pay tax on the 10 million, but the company didn't actually make it. Yeah. So the bank knows that that's a possibility. So what I'm actually saying, I'm paying myself, and the actual money that's there are two different things. That's why they need to look at it and say, is the business actually making the money that they're saying they're paying the owner? And this is something that can happen when you are the owner. We've actually got a similar situation where it's not just if you're the owner. Like some people say, especially like coming from Australia, it's whose name is it in? Is it in my name or my wife's name? Right? And then if it's in my wife's name, then I can buy one under my name. That's all that really matters. Whereas in Japan, they don't look at it like that. It's the household.
Yeah.
So you've got one situation where the wife, Japanese wife, is a daihyo, so she owns the KK and it's in her name, but most of the salary goes actually to the husband. Right? So it's like a 30.
It's a pretty common situation, actually. Yeah.
It is common, but now the husband wants to apply for the loan. And the husband looks like just a straight up salary man. He's not the daihyo of the company. But the bank says, well, hold on a second. What is this company? Who is the daihyo? It's you and your wife. There are 2 employees. And you are the same household. So it's basically the same thing. So in that case, we still want to see the P&L of the business. Right? Because it's the same thing. If it were, a company with, say, 5 or 10 staff, and it's one of the staff members, right, that wants to do it, and there's no actual relation, not a family member, and it's not the same household as the owner, as the business owner, then they won't ask for the business P&L.
Yeah.
Right? Separate. But when it's just your household, there's 2 staff, it's you and your spouse, they treat it as the same thing, regardless of who is technically the daihyo or not.
I guess bottom line, no shortcuts here.
Not really. No.
No.
And we've got someone doing that right now. And so that's the only tricky thing is, okay, they were kind of in the black previous year, then in the red this year. And just to think a few 100,000 yen, it's like almost negligible. But the bank has a bit of a line, are they in the black or in the red? And that's kind of almost it. Not how much in the red are they, how much in the black are they? So if you just made 100,000 yen profit, you're in the black, then that's still okay. If you're down 100,000 in the red, that's not okay. And so we're still going to do the application and see whether or not they get approval. So that's fingers crossed.
All
see
right.
how we go.
Good luck with that. And I personally will have to sign off, but carry on if you're into it.
I will stop the recording and we'll talk next week.
Yep. Thank you all for joining today, and thanks for joining us, Blanca. It'll be great to have you every week now.
Free again.
Or as often as you can make it. I mean.
Yeah.
I'll do my-
Blanca.
Thank you very much.
Thank you.
All right, so not sure if you've noticed there, but this is the very first time that we actually had all 5 of our panel members on the same show, including Blanca, our brand new member. Hope you've enjoyed the conversation. Let us know what you think in the comments section, and please don't be shy to float any questions that you may have or any topics that you would like us to discuss or answer in future episodes as well. Now, before we go, we're also, as always, going to tell you and also link to our other sponsor's website. That's Hiroshi Shimizu, immigration lawyer and administrative scrivener. If you're thinking about moving here on a more permanent basis, or you're already in Japan on some sort of a temporary visa and you want to switch to a longer term or permanent one, or if you're considering setting up a local company or a branch office of a foreign company and you've got any sort of business or visa related inquiries, or even if you just want to find out what your options are on any of these topics, feel free to contact Hiroshi Shimizu. You can find him at japanimmigrationexperts.com, and he can help you set up a company, apply for any kind of visa, or just provide you with the best advice and extremely affordable consultation related to these topics. And he's already done that for many of our listeners. So feel free to reach out to him. Again, that's japanimmigrationexperts.com, and you'll be well on your way. And that's it from us for today, folks. Hope you've enjoyed this episode of the Japan Real Estate Podcast. Do share it with your networks, and please let us know what you think. So leave us a short rating or review on the iTunes Store, on Spotify, or just drop us a line in the comment section or wherever you might have found this episode. We love hearing from you. Hope to have you with us again.